safe haven flows USD, JPY, CHF. Keep hearing about these safe haven currencies, especially the US dollar, Japanese yen, and Swiss franc. What exactly makes a currency a safe haven, and how can I trade that idea? Excellent question. Safe haven currencies are those that investors flock to during times of uncertainty, fear, or market turmoil. Think of them as lifeboats during a storm. But why those three? Why USD, JPY, and CHF specifically? Great follow-up. Let's break them down one by one. The US dollar is the king of safe havens. Why? First, it's the world's primary reserve currency. Over 60% of global FX reserves are held in USD. Secondly, the US has deep, liquid financial markets, especially treasury bonds. In a crisis, investors need liquidity, and nothing is more liquid than the US Treasury market. So people just dump everything and buy dollars when things go south. Pretty much. Also, most global trade is invoiced in USD. So in a global shock, demand for USD spikes because people need it to settle debts and contracts. Now, Japan's yen is a classic safe haven for different reasons. It's not because of yield. Japanese interest rates are near zero or negative. It's about capital structure. Japanese investors hold a lot of foreign assets. When markets crash, they repatriate money, meaning they sell foreign currencies and buy yen. That creates upward pressure on the JPY. So the yen strengthens when there's panic. Exactly. And Japan has low inflation, a current account, surplus, and political stability. All that makes the yen a go-to currency in storms. And then there's the Swiss franc. Switzerland is known for political neutrality, a strong banking sector, and a long history of financial stability. That reputation makes CHF attractive in times of uncertainty. But isn't the Swiss National Bank always trying to weaken their currency? Good point. Yes, the SNB often intervenes because a too strong franc can hurt exports. But in crises, they can't stop the inflows. The market sees CHF as a rock. So when should I expect these flows to kick in? When markets get nervous. It could be due to geopolitical tensions, financial crises, pandemics, major elections, or wars. Safe haven flows tend to override fundamentals short term. Even if a country has weak economic data, its currency can strengthen purely due to safe haven demand. How do I trade this idea? Look for risk-off signals, falling stock markets, widening credit spreads, VIX spiking. In those cases, look to buy USD, JPY, or CHF against higher beta currencies like AUD/NZD or emerging market currencies. Got it. So I'd go long USD TRY or short RD/JPY when things get ugly. Precisely. But remember, timing is crucial. Safe haven flows can reverse quickly. Once fear fades, money flows back into risk assets, and those currencies weaken. Let's look at some real-world cases. 2008 global financial crisis. Massive flows into USD and JPY. Eurozone debt crisis. CHF soared so much the SMB had to peg it. 2020 COVID crash. USD surged initially, followed by strong JPY gains. They're not always the best performing, but they offer shelter in a storm. Learn to recognize the signs of fear, and you can profit by knowing where money will hide. Thanks. I'm starting to see the market less like a puzzle and more like human behavior in action. That's the secret. Currencies are just mirrors of global sentiment, and when fear strikes, follow the money to safety.